On today's show, 3 questions. Number 1, how resilient... We're going to start that over. How resilient... edit that. On today's show, 3 questions. Number 1, how resilient is the economy? Number 2, what's the cost of Thanksgiving this year? And number 3, how do you live without regret? Welcome to Dentist Money's 2 cents, where we help dentists navigate all the noise. I'm Matt.
I'm Jake.
And I'm Rabih.
Yeah, you are. Rabih, it feels good to have a compadre here with us, huh?
Yes.
You and I have kind of like, I think
we need
4
someone
of the
to
last
keep us in
5
check,
weeks.
you know?
Jake, because of end of year stuff, we haven't been able to get a lot of advisors on with us. So Rabih and I have been holding down the fort, and every single time, in fact, the team that edits this for us makes fun of us because they'll be like, you always make comments like, oh, it's just me and Rabih, like, how are we going to fill the time? And then we talk for 45 minutes, sometimes longer. We never are short of talking.
No, I love being here. This is favorite part of my week, being here with you two. This is exciting. This is more exciting to me than Thanksgiving dinner this week.
Jake, I'm glad you brought that up because the Thanksgiving theme 2 cents today. We are decided to do this early because the team's off starting, Thursday and Friday. This will come out on Saturday, but we thought we would do a Thanksgiving theme. I'm going to start off with a question for you guys. If we had to compare Christmas versus Thanksgiving, which one wins in the battle royale of holidays?
Jake, I'll let you go.
Okay, I'm 100% Christmas guy over Thanksgiving. I am do we need Thanksgiving, really? I know Thanksgiving is great, but I'm just not a huge... Rabih's going to disagree with me really hard on this because I think I know his take, but I am not a huge traditional turkey stuffing type of guy, just food-wise. Like I think Christmas dinner's better. Like a Super Bowl appetizer type of dinner for me is more exciting.
Okay.
So anyway, not a Thanksgiving guy.
I have pushback, but I want to hear Rabih. What are your thoughts? What's your take?
Just to give some background info for the listeners, we've been having this conversation every team lunch for the last 3 weeks. But here's the thing. When I was younger, I loved Christmas because gifts were involved and there was like a magical aspect of it about the still existence that someone is real. There was someone who was still real back then. And it was so fun. But as I grew older and as I indulged in cooking and the fact that I'm the guy who makes the turkey every single year, I'm starting to lean towards enjoying Thanksgiving more. There's something very rewarding about spending 5 and 6 hours in the kitchen and then enjoying a meal with people you love and then laying down on the couch, not able to move afterwards. It's an incredible feeling.
Yeah. But so it's funny, Jake, you went right to the food part. And I know we've talked about this before that you don't love the Thanksgiving like feast. You don't love the food associated with Thanksgiving. And I think there's arguments to be made there. I think Thanksgiving's become super underrated in my life. And the reason I say that is nothing to do with the food, but football. It's like low pressure. It feels like less pressure than all the hoopla around Christmas. And so like, for example, tomorrow I'm going over to my brother's with my kids. We're just going to go watch football literally all day, hang out. Like it's just super low key. To be fair, Rabih, I am not the person in the kitchen cooking the turkey. I'm on pie duty this year. And so I'm with you, but I'm with you. I still am a Christmas guy, Jake, over Thanksgiving, but Thanksgiving's creeping up for me. It is
so a great 4-day weekend, that Thursday,
chill.
Friday, Saturday, Sunday, where you get a lot of sports, a lot of football. It is. I do think that's a great point. It is less pressure than the Christmas hoopla where you're buying gifts and doing all these different things. It almost feels more relaxing. I like them both. But yeah, I would pick Christmas over it, but I think that's a great point, Matt.
Yeah, I just think it's more chill. But okay, so we're going to talk more about this, but let's jump to Rabih. How resilient is the economy?
Yes. So in continuation of the theme over the last couple of weeks, it's end of year. Wall Street is kind of in a vacation. Not a lot of information happening in the market. So all these moves up and down, whether you're happy about them or sad, don't really matter. It's noise. It's not really hit by fundamentals. Coincidentally, the Federal Reserve released their financial stability report, which they do release every, I think, quarter, etc. And they came up with a list of, it's more of like, let's take the 10,000 feet view of the economy. Let's look at all, the places where there might be weakness, and let's just give an overall score to see where the economy stands. So with that, I took some summaries out of it to share with you. So they looked at asset valuations, they looked at borrowing by businesses and households, they looked at leverage in the financial sector as a whole, and they looked at funding risks. And those just tell you how our financial system is vulnerable or not, and what risks they expect to show up on the horizon. So there are always those black swan risks, the risks that come out of nowhere that we're not expecting. But there are also risks because you can see some indicators in the market that they are not running as efficiently as they think. So just to give you some summary, for asset valuations, they think valuation are elevated in range of markets, including those in equity, corporate debt, and residential real estate. They think liquidity in financial markets was generally low and can be strained during periods of volatility. I'm only talking about the bad ones, by the way. But if I don't mention it, it means
You're going to bring the mood down.
Really,
you're going to bring the mood down early, so then we can set the bar low and then build upon it with Thanksgiving and like mushy gushy stuff.
Yeah, you can.
I like
that.
it.
But I also don't want to be the bad guy, so I'll throw in some good ones.
Okay.
Vulnerabilities from business and household debt remain moderate. Business leverage is elevated by historical standards. Household debt is at a modest level relative to GDP, and it's mainly owned by prime-rated borrowers. So whoever has a high mortgage or has lots of debt as a household, they're still a high-quality borrower. We know this. We've covered it multiple times. Auto and credit card loan delinquencies remain above pre-pandemic level, which reflects an extension of credit risk. Regarding the banking sector, it's sound and resilient according to them. They have enough capital and the leverage continues to be low, except hedge funds, which we also know about. Hedge fund leverage is at all-time high and near the highest level since it was in 2013. In terms of funding risk, they are doing well. Although the uninsured deposits have decreased and insured deposits have increased, so people are putting their money into the markets. So overall, it's looking good. They have run a survey asking CEOs what they think are the most potential shocks for the economy over the next 12 to 18 months. Back in March, when they ran this report, the largest fear was persistent inflation, monetary tightening, and monetary tightening. And the second was policy uncertainty, along with commercial and residential real estate. Those were the top three fears. But as of now, when this was done in the fall, the biggest fear is U.S. fiscal debt and sustainability, the Middle East tension, and still policy uncertainty. So the previous ones regarding inflation and commercial real estate and other stuff like cyber attacks, Russia-Ukraine war, banking sector stress, Chinese economic weakness, all of these are still there. It's a list of like 10 to 15 worries, but those were the top three. While in a sense, if we want to look at these and analyze them, in a sense, while the risks are still there, the priorities and what CEOs think is the thing that might most affect the economy have switched and have changed. I cherry-picked two of the risks because we've got really good data on them and I wanted to share, and probably we might not be aware of them. But the first one is the banking sector in terms of what they hold on their balance sheets in terms of bonds. So just to bring it back to memory, last year in March, we had community banks face a struggle, and we had the New York Community Bank kind of file for bankruptcy. And the big reason for that, not only because people ran to the banks and started taking money, but because these banks have lent a lot of money to commercial real estate and businesses. And those commercial real estate businesses have been struggling to pay back their loans. As they lent commercial real estate businesses, they have bought a lot of bonds to put them on their balance sheet. And when the Federal Reserve decided to increase interest rates, the value of these bonds on paper has dropped. So what the Federal Reserve decided to do, they were like, let's assume that they want to sell all these bonds right now. Let's put away all these accounting tricks that make the numbers look as good as they are, and we'll get into them in a second. But let's decide to sell them as they are. And probably you guys can see the figures 3.3, and you can see how big of a gap in the balance sheet there is since 2022 and until now. They haven't really decreased much, although interest rates have started decreasing. You've got around $800 billion losses on these balance sheets that if they decided to sell them right now, it would hit the banking sector. Just to give you just some reference. So when a bank or any investment company decides to buy an asset and they're buying it for investment purposes, it's not like they're buying a big percentage of it, like above 30% where they have ownership. We're talking about just buying something and you're a passive investor in it. There are three ways you can categorize it from an economic accounting perspective. You can set it as saying, this is for me because I want to trade it. This is here, I bought this because I want to sell it later on. And this is here because I want to hold it to maturity. And the available for sale and held for trading, when you report every single quarter, etc., you are putting what the market price is. What's the price if I decide to sell it right now? And your balance sheet will go up and down depending on the price of it. Whereas if you say, I bought a certain business, I bought a certain bond, and I'm holding it till maturity, the way you disclose it on your balance sheet is that you amortize it. You do not put it there at fair value. And what that means, all these bonds, if you decide to sell them right now, are at a $800 billion loss. But because you are disclosing them at an amortized cost, it still shows that your business is doing well. And this is what the risk the Federal Reserve is talking about. Nothing prevents banks and businesses from shifting the categorization of an asset from being held to maturity to available for sale or available for trading. So they're saying as long as they say they want to keep holding it till for maturity, yeah, the balance sheet of these community banks looks really healthy. That $800 billion loss does not exist. But if for any certain reason, macroeconomic changes, people rushing to those banks asking for money that forces them to liquidate, they might have to recategorize their assets. And if they do, that's an immediate loss that would, send shocks in the financial system. So that was one of the big things to look at. And an $800, hit is not small for regional banks throughout the whole sector. So that was the first one. Do you guys have any?
Yeah, I just want to summarize that back, just make sure from an understanding perspective for everyone listening. Rabih, you're saying on paper, this would be the equivalent of, let's say, a dentist out there in a brokerage account holding certain positions in a company or a bond or whatever it is, a certain investment that is on paper showing a negative, like a loss, basically. So these bonds on these banking balance sheets are at a loss on paper. And you're saying, so that's showing a risk. There's definitely a risk there, but they've got basically the way they're categorizing it, or basically they're stating their intention is what you're saying. They're stating their intention with those bonds, and that's going to dictate how risky that actually is. For now, it's not a worry. It's just like on paper, just like if you have a position in your brokerage account that's at a loss, it becomes a bigger risk if they change their intentions with those assets. Is that a fair summary?
Yes. On paper, it shows that, there's no loss. It's fine. They're holding it till maturity. But in reality, if they go out there and they decide to sell it, what they have put on paper, what they have disclosed every single quarter is not what they're going to be able to sell it for. They have to sell it at an $800 billion loss.
Got it.
So that's what's happened.
And for a point of clarity out there for people, bonds get so confusing for people, and it's so understandable because bonds are confusing. But the reason you're saying this, Rabih, why you're saying in real life they're at a loss if you had to go sell, if you think about it, because the bonds they have on those balance sheet have a stated interest rate that is far lower than what's out there in the market. So if I'm going to buy a bond now, if I want to go buy a bond, why would I buy a bond on these balance sheets at, let's say, 2% interest rate when I can go get a new issued bond at 6% interest rate? So because 100%. Of that, which is why you're hearing, a lot of times people might hear this, but that's the concept of rates go up, bond prices come down. That's exactly why. So I just want to make sure that people can understand why you're stating like these bonds, like someone might be out there listening, like why are they down 800 billion? That's exactly why, because the interest rate landscape has completely changed.
Yes. 100%.
Jake, any thoughts on this?
No, I'm good at that. I thought that was well said.
Jake is an equity guy. He doesn't really care.
Jake's like, we don't need bonds, so I don't even care. Rabih, I want to go back to one thing you said earlier. I wanted to clarify. You said hedge funds are very leveraged, over leveraged right now.
Yes.
Are they separating hedge funds from private equity? Do they put those in two categories? And do they reference anything in regards to private equity?
They didn't. I can go and search the document more. It's 67 pages.
Well, can we just take a second and go ahead and do that? Just live here on air, please?
Yeah, I did not see anything regarding private equity outside the context of private equity involved in commercial real estate. But I can look further into it. But no, when they were talking about hedge funds, they were talking about stuff related to tradable securities. So we're talking
Got it.
about options, stocks, etc. Because liquidity is kind of dry out there, and this is the whole conversation. It's more of a symptom due to the explosion of passive trading instruments like ETFs that are just buy and hold. While a lot of people got access to the markets have become less liquid because of them. It's a whole conversation we can talk about on other episodes. But hedge funds have been over leveraged because there's an opportunity for them to provide liquidity in the market in a sense. So we'll see how that pans out. And there's no right or wrong whether hedge funds are leveraged. It all is going to depend on whether the market moves in their direction or against them. And then
Sure.
that's the problem.
Yeah. The reason I asked that is it just pertains specifically to obviously the dental space with DSOs, private equity. Anecdotally, we're hearing and seeing that private equity has been, and specifically in the dental space, DSOs, there's been a big chunk of them that have also been over leveraged and had some trouble. We'll wait and see what happens in 2025 if cost of capital does come down, what that does. I know there's been liquidity issues in the private equity space, again, specifically in dentistry. So just curious on that, if they reference anything at the global level, because I know there's been a lot of concerns around DSOs and what's happening there. We haven't seen a true recap, I think, for 2 years probably. Jake, I don't know if you've seen anything different, but
Yeah, no.
we haven't seen
It's been dry.
anything. So anyway, just curious. Rabih, yeah, you had one other thing on that you wanted to mention.
One other thing, I'll keep this one short, but this is related to our high yield savings accounts, people who are putting their money in money market funds. So the Federal Reserve stated that money market funds and other cash management vehicles remain susceptible to runs owing to structural vulnerabilities. Just to show you, the assets managed by mutual funds increased, and only like money market mutual funds, increased since the April report to more than $6.25 trillion by the end of August, because they offer attractive yields better than just having your money in the bank, but at a slower pace than 2028. But what they are saying and what they mean by structural vulnerabilities, you are putting your money in a high yield savings account that's most probably buying a mutual fund. And that mutual fund is investing in treasuries and short-term treasuries and short-term municipals, STIPs, etc. What happens is that the structure of a mutual fund has more of a dominant effect. If a big player comes in and decides to liquidate a very big portion of that mutual fund, other participants in the mutual fund will also take a hit. So suddenly that 5% return that you're expecting on your money market mutual fund will probably drop to 3%, and that will freak you out because you can find yield elsewhere, and you will start selling. So mutual funds, they are not FDIC insured like bank deposits, which are more susceptible to runs simply because of how mutual fund runs, and one big investor can affect other investors. And they're saying because there's $6.25 trillion in those funds, they exploded since interest rates started going up. Floating rate notes, high yield savings accounts, all these words that we've just added to our vocabulary in the last 2 years. They think that this might be a risk, especially, and it could be due to good stuff. The equity market might start going up really high, and people start fearing having a FOMO that they want to participate, and they'll start running out of the money market fund really quickly. That might create some troubles in it. Or interest rate might drop really quickly, and people might want to exit it really fast and might create problems in it. So that is also a risk that they have in mind, and those are more of like, the system overall is really good, but we can see pockets where a problem might arise, and that was what this report was. Otherwise, the economy is very resilient.
Can I make one point to that, Rabih? This is a bit of an offshoot, but I've experienced this recently where, like, even with their high yield savings accounts, we usually recommend that a lot of people get a high yield savings account. It's a great place to store short-term money that you might need in the future. Again, like you said, you can get some sort of return instead of nothing that you're getting just from a brick and mortar bank, right? It's a good place to store your money for short-term liquidity needs. I've had a few people be like, hey, my high yield savings account, it was at 5% a couple of months ago. Now it's down to 4.75 or down to 4.5%. Do we need to move? Do we need to change? Or is there other things out there to put my money? I like that you brought up that this is going to happen. Those high yield savings accounts are not fixed at that certain rate, right? As little as a couple of years ago, I remember my account was like 1.5% yield, right? It'll go down, and this is going to fluctuate. So this is normal. It's going to happen. Also, these 2.5% or 0.5% moves are not as big as you think they are, right? If you have $100,000 in a high yield savings account and it goes from 5% down to 4.75%, you are missing out on about $250 over the course of a year, right, in yield that you'd be getting. Even less than that because you'd have to pay a little bit of taxes every single year on that. But I would just encourage, you don't need to switch up your whole strategy or try to find the best high yield savings account that has a 0.01% better return than another place. In the end, depending on how much money you have in your account, it's going to come out to be pretty minimally in a dollar amount. And so I don't think it's anything to be worried about. I don't think you need to change or look for the highest rate high yield savings account. Just whatever works best for your strategy and is in the general ballpark, I think works.
That works.
Yeah.
And for whoever is worried about the mutual funds themselves, this is just the mutual fund as an industry because it's big, but you can go and get an ETF that follows the money market fund, or you can go directly to the source buying a CD or buying a short-term treasury itself, and that would just take away that middleman called the mutual fund that might have causing some troubles.
I think what you're saying is, to quote the incredible 90s band TLC, "Don't go chasing waterfalls." I think you're saying don't go chasing interest rates. Is what you're saying, Jake. Something like that.
Love it.
Yeah.
Exactly. Exactly.
No, I hear the same thing from people. We highly encourage don't be jumping from. It would be an endless game if you're doing that. It would not be worth.
And they're all
rates.
in the same ballpark, right? Some might have 4.81s, 4.6, and they're all in the same ballpark. Yeah, if you want to get $50 extra or something, if that's worth it to you at the end of the year by switching banks, sure, go for it. But a lot of the time, I don't think it's worth the hassle.
Yeah, and to your point, Rabih, and Jake, you're reiterating this is a structural thing. As the Fed continues to lower rates at the short end of the curve, that's what all of these things are based on. This isn't like mortgage rates. These rates are directly linked to what the Fed is adjusting. So as the Fed lowers those rates, these will just continue to come down. So you should just be expecting your high yield savings accounts to be dropping in 2025. It's going to happen. So
you can't get a 5% free return for forever, unfortunately.
No. Side note on that, I know there's been all sorts of hoopla around Warren Buffett and him going to cash and all this stuff. He moved he's got $300 and something billion in cash now. You know what he's generating monthly right now? It's $15 billion a month in his cash holdings. So, people are freaking out. What's Warren Buffett doing? He's getting out of the market. It must be crashing. I think we get one of those stories probably once a month now. It's or he's just gathering $15 billion a month while he waits to see what happens over the, it's just completely different game he is playing. Okay, Rabih, any other final thoughts on that? Okay, that was a great summary. Sounds like we're summarizing that with the economy is strong to quite strong right now. We're feeling pretty good.
With some, small tweaks that could happen here and there, but that's about it.
Okay. Awesome. Okay, I wanted to jump. This will be kind of quick, but we wanted to do a Thanksgiving theme. What's the cost of Thanksgiving? I think we did this last year. This always blows me away. So I'll give you some context. The American Farm Bureau Federation's Thanksgiving dinner survey. Okay. So they've been doing this since 1986. They just do a survey and figure out how, give you kind of a cost of a Thanksgiving dinner. What would you guys say if you did not look at the doc and the link that I put in there? So what would you guys say the cost of a gathering of 10? What does the American Farm Bureau Federation's Thanksgiving dinner survey say? What would you guess?
What was it last year? I remember doing this last year. Was it $130 last year?
10 people. Yeah, I would say 150, about $15 a person would be my guess.
160, 170.
The American Farm Bureau Federation's Thanksgiving dinner survey claims that a gathering of 10 for Thanksgiving is $58.
No way.
$58. This is what I'm saying. How is this possible?
Your own turkey?
Yeah, well, okay. So I'm $58 for a gathering of 10. There's no possible way. I'm pretty sure I took my family to Chipotle the other day and it was $75. So there's no way. They're saying $5.80 per person for a Thanksgiving dinner. I don't know where they're getting these numbers, but they're saying the number is down 5% from 2023 and 4.5% from 2022, but still 19% higher than the cost of Thanksgiving dinner pre-pandemic in 2019.
Oh, but it's down the last couple of years, though.
Down the last couple of years. Yep. So the biggest, so then they break this down. They break down the whole thing. So it's down 19%, or sorry, up 19% from pre-pandemic in 2019. They're saying the average frozen whole turkey decreased $1.60 per pound from 2023. So a 16-pound turkey, they're claiming a 16-pound turkey is $25.67, which is down 6% from 2023. So where are you at, Thanksgiving inflation? I just thought it was fun to bring this up, but it is shocking to me. And I'm like,
I
how
don't
are
buy
you? I don't buy it either. There's no anyone out there listening. $58 for a full Thanksgiving meal. There's no possible way. They're claiming a good chunk of that. They actually break this down by item of like where the prices have changed down to like the pumpkin pie mix. So we don't go every item. So they said that the 16-pound turkey's down by $1.68. Dinner rolls and stuffing, they're up 8% from last year. So they're the culprits of an increase. Anyway, they break it all down, but I'm with you guys. I don't buy it. The one item that is way down by $3.23, the boneless ham is down quite a bit. They lead the charge. Apparently no one's eating boneless hams now. Anyway, I'm with you guys. I don't buy this. Any thoughts or reaction to this?
Well, I'm just trying to think of, we're going to Thanksgiving dinner tomorrow. We actually have 10 adults. We're doing a smaller gathering tomorrow. So there's going to be 10 of us. Our job, me and my wife's, or our dish that we have to bring is mac and cheese. I know that's not really traditional Thanksgiving dinner. We're doing something slightly different, but we have to bring, I'm doing mac and cheese. But I know we are going to get the ingredients today. It will cost us $30 for our mac and cheese ingredients for this big dish for everyone. Yeah, so it's going to cost $30 for that. And I think everyone is bringing something of similar, like everyone's bringing a $20 to $30 dish at least to this party. So I just know for 10 people for us, it's going to be $200 to $300 because everyone brings something that's $20 to $30.
Yeah. I mean, I am bringing pies. Now, to be fair, I bought them and I'm going to make one, but I'm bringing like 4 or 5 pies. I think it cost me $80 for the pies. Like, where in the world are you spending $58 for the full meal? What world we living in? They do break this down by region. So they're saying the cost for the classic meal. So they do the survey. I guess the grocery list survey is how they do it. The cost of the classic meal without ham, potatoes, and green beans was the cheapest in the South. So in the South, it's $56.81. That's increased. The Northwest is $58.90, and then the West, the most expensive grocery bill. So I guess they're referring specifically like California for a gathering of 10 in California is $67.05. There's no possible way. Rabih, you're shaking your head. There's just no possible way. I don't even know what this is.
Yeah, the math doesn't add up.
The math is not mathing right now. This is Thanksgiving math, as they say. Okay, we just wanted to hit that cost of Thanksgiving. If you're out there thinking this is ridiculous, we just gave 2 examples of how this is not possible.
Is it still, though? I wonder if, though, Thanksgiving costs less as a group than our regular eating out habits. Is that probably a thing?
Well, I'm sure. Yeah, I mean, I'm sure. It's probably a bad example to say you go to a Chipotle or whatever. But so, yes, I think that is probably an unfair comparison. But I also don't know how you'd get away with only spending $58 for a full Thanksgiving meal. Like, just imagine, Jake or Rabih, you're more of the chef in this situation. You are cooking the entire meal for 10 people. You're going to spend $58?
No way.
Or triple that.
Yeah.
Probably 150, 160. Also, if you want to really think of it, you're spending 6 hours in the kitchen.
Well,
don't even get $50 an hour. Tell me how much
it costs. Going to the cost of time. Yeah, this looks like we're just breaking down the cost of the items, but I don't know how that's, again, even possible. Also, I assumed a turkey was way more expensive than that. $27 for a 16-pound turkey? I would have think way more, but maybe I'm wrong. Okay, last topic here. We wanted to keep this somewhat Thanksgiving themed. I thought this was appropriate. For those of you that don't know, Jake is our resident writer at Dentist Advisors. He writes a fantastic blog called Money Talks. You should definitely check it out. He posts every week, and we post those on the Dentist Advisors website, but he also has his own private blog you can check out. this is on top of like the newsletter and things we do. Jake is definitely the regular writer for us. And Jake, you wrote an article talking about how to not live with regrets. Do you want to talk about this?
So let's get existential here for a second. I know this is probably a theme of me coming on here. I tend to talk about these bigger, more broad lifestyle things.
I think,
than the in-depth economic stuff, which Rabih has covered. So this is a bit of a switch, but in the spirit of Thanksgiving, I wanted to do this, something more big, broad lifestyle, if that's something you're interested in. So I think all of us have heard by now, this data has made the rounds, which is about this Australian nurse. Her name was Bronnie Ware, or not was, is, she's still alive. But she used to work in palliative care, which is just dealing with patients who have only a few weeks left to live, right, in life, from like 3 to 12 weeks left to live. And these studies were done about, 15, 20 years ago. She just worked with enough of these people, and she would always ask them, okay, like now that you're about to die, like we really don't have much to do but to reflect on your life. And so just tell me, give me some life lessons. What do you regret? What do you think is of utmost importance? And through talking with hundreds of patients, she found out there were common themes or common regrets that came up over and over again. And so she wrote a book called The Top 5 Regrets of the Dying, where she published, here are the top 5 regrets that just came up with everybody over and over again. And so I just wanted to go through these really quickly with you guys. Again, I know Matt and Rabih have already probably heard these, but I think it's a good refresher. So number 1 was, I wish I'd had the courage to live a life true to myself and not what others expected of me. Number 2 was, I wish I hadn't worked so hard. Number 3 is, I wish I'd had the courage to express my feelings. Number 4 is, I wish I'd stayed in touch with my friends. And number 5 is, I wish that I had let myself be happier. I know you guys have heard these before. I'm just curious before I get into some other stuff here. Are any of those surprising to you? Do those seem like they make sense?
Oh, they very much make sense. I think the biggest challenge of life is to have those not be the regrets and have those be a focus for you while you're young and healthy and able to like take advantage of them. I think one of the biggest challenges with money, and in particular the group of people we work with who are all, dentists, let's be honest, are a very affluent population for the most part. And I think one of the biggest challenges that I think that they face, I truly do think this, is not getting wrapped up in the spreadsheet side of things and finding purpose and like just watching your numbers grow. And believe me, I'm not saying that from a place of judgment. I'm saying like I empathize with that. Like I think it's really difficult. So none of them surprise me. It's like a cliche for a reason, right? Of this whole idea of like relationships matter more than anything, and money should not be your focus. But it's really hard. I think it's really hard in the heart of your career to not have these end up being a regret. But I think that's a huge challenge in life.
Yeah. So again, reading through these, I got to tell you, I was a bit surprised, Matt, that not a single person here on their deathbed in this moment of supreme clarity mentioned anything about Bitcoin reaching 100,000. I was shocked that didn't come up. Nothing about Nvidia. They didn't talk about Nvidia at all being the stock of the century. No one mentioned going back to 2007 and wishing they'd bought Apple. I mean, like, what about like Elon, like this new Trump Department of Government Efficiency, like with Vivek and Elon Musk? No mention of that.
Yeah.
No hot stock tips. Nothing about like the $34 trillion national debt that we're in. None of these. I mean, are we shocked that none of these things came up? All of these huge events that we need to talk about, none of them came up for these people when they were looking back on mortality.
Yep.
Not a single mention of money. The only mention of work is a regret of having done too much of it.
Having worked
and
too much.
The only mention of any political or economic event was they'd wish they'd let themselves not worry as much and let themselves be a little bit happier. So I'm being a bit tongue in cheek here, but we get so up in arms about all of these seemingly very important news events that are happening in our world. And Thanksgiving is a time when we get together with friends and family, and we like to talk about Bitcoin or how Trump is ruining the economy or making the economy great, whatever side you want to be on. But when I look back, I mean, can we remember any news item from 10 years ago or from 15 years ago? Can we remember a single like news headline? Like these seem so big and important now. But I just wonder, holidays are a good time when we get together with family and friends. I think they do serve the function of maybe we can step back a little bit from work. We take a couple of days off, step back from the busyness of day to day, And I think like maybe this is a time to reflect on what's going to matter most in 30 years from now. Maybe not the price of Bitcoin or the cost of groceries or how much it stinks to pay for gas or whatever is happening that we're upset about. It's likely that we were not going to remember any of this 20 years from now.
Yep, totally agree. Rabih, I have a response for one thing Jake said, but Rabih, I want to hear what you have to say, if anything.
I love everything. And when I read the article the first time Jake wrote it, I was like a big fan. I liked and subscribed and made a comment, but I really like it. And I think it's a daily struggle for me, and I guess it might be familiar with others too, just to force yourself back to think from a long-term perspective. There's like this, I was watching a TikTok the other day. It was making fun of millennials, and it said millennials live an expensive, anxiety-inducing, hobby-filled life. And they were like, because they're living that life, they are forced to always think in the short term, so always worried about what's happening in the next year and the stuff that are happening in their day-to-day life. And it's a constant struggle trying to embrace the broader perspective, the long-term view that actually isn't as anxiety inducing and isn't as expensive and isn't as worrying. And like, I feel it's just the challenge of our days. Like 2-3 generations ago, their worry was how to put food on the table, but our worry is how to keep the right perspective. So yeah, I love it. It needs to be a constant reminder. Like, you do not hear this.
Yeah, I love this conversation as well. Like Jake, before we hopped on, I know you were saying like, man, maybe we talk more about like something technical or whatever. I'm like, no, this needs to be talked about. I think these are great topics. I think the most interesting part of this for me, broadly speaking, is we all know this, right? Like, we all know this. None of this is shocking to anybody if they hear the 5 regrets of the dying. And yet we'll all wake up tomorrow and we'll keep focusing on Bitcoin prices and who's in office. And like, I think, Rabih, to your point, the greatest challenge we have in America, generally speaking, is keeping this perspective and focusing on what actually matters. Jake, one thing I wanted to mention too, you use an example in I loved your tongue-in-cheek monologue there and kind of being like, weird that no one mentioned this stuff. I always ask people to the one example you gave, which was, man, I wish I would have gone back and bought NVIDIA this time or Bitcoin in 2010 or whatever. I think a natural question to ask yourself is, let's say you did. How would your life be different now? Like, honestly, you'd have a lot more money, but how would your life be any different? I think that's a huge thing to be asking yourself. Like, would you have less marital problems, or would you have a different relationship with your kids or your friends, or would you have any different problems? I think asking yourself that question whenever you go down that road is really critical to hopefully keeping some perspective here.
I love that question. I think we should be asking ourselves that question all the time, even with just things like, even now, like, let's just keep going on the Bitcoin thing. We're like, okay, should I get into Bitcoin right now? Should I put $5,000 or $10,000 into Bitcoin? And it's like, okay, let's just play out this scenario. You put $5,000 into Bitcoin. Let's say the best case scenario happens, like you double your money or you triple your money. Let's say that like the best case scenario does happen. You turn $5,000 into $10,000 or into $15,000 now. You did it.
Or let's say 50
now
grand.
Or 50, even 50. Yeah, let's go crazy scenario. It explodes and it becomes a global currency and we all bow down to Bitcoin, right? The whole thing there. How is your life different now? Okay, you have $50,000 now as opposed to $5,000. Is your day-to-day any different? Are your relationships with your friends or family any different? Are you working any differently? Likely not, right? Probably not changing much for you now. So yeah, this is hard. Like you said, Matt, we all know this stuff. I wonder, again, if these people who gave these regrets, if they were magically healed and had an extra 15 years to live, if they would just immediately go back to living how they were living, right? And it's really hard when we are here living and not faced with our immediate mortality to kind of keep this long-term perspective. But I think it's worth trying, right? Or just thinking about it, at least. That's the thing, is that we're not going to change who we are from one day to the next. But if we can just get these periodic reminders and just think, oh, maybe I could stop worrying less about this national debt to maybe go play some catch with my boy, might be a thing there. So anyway.
Yeah, I think it's a constant practice, a constant focus, and re-shifting your perspective and trying to keep that perspective. It's a challenge. It's unfortunate that it takes sometimes for people, I know for me in my own life, it takes big losses. It takes people that are really important to you in your life to like shift your perspective. And I still suck at it a lot of times, even when you do have those major losses in your life and you are facing mortality through someone that you love, and being like, man, like I mentioned this before, when I'm watching, I'm watching my mom on her deathbed. She wasn't thinking about this stuff either. Like, it gives you that perspective, and then it's a matter of trying to take that and carry it forward every single day in your life. But it's really, really difficult. Rabih, we'll give you final word on this if anything.
No, I actually loved everything you guys said. And now when you mentioned that, Matt, you about having a conversation with your mom, I recently had one with my grandma, and I'm now remembering the conversation I've had with her. Actually, she just narrated her whole life for me and how happy she was with her own mini story that is so unique to her. And my grandma grew up in Lebanon and faced times of great wealth and times of great suffering during wars, and none of that came in the conversation. It was all about her own personal journey and how she reflects on them. And I think that what matters at the end in the last couple of days.
Yep. Man, we got very existential on this Thanksgiving episode.
But
Bitcoin,
I love it, guys. Bitcoin.
But Bitcoin, 100,000 to the moon. No, and I know, Jake, you were saying it tongue in cheek, but hopefully it does give some perspective and maybe a reminder going into this holiday season. Just as you're listening to this, Thanksgiving just happened. Hopefully it is a good reminder of just reshifting your focus as we finish up 2024 and get into a new year of what actually does matter, and trying to structure your life around that. Hopefully this is a part of that. Everyone, thank you so much for listening. We hope you had a wonderful Thanksgiving as you're listening to this. If you want to talk to us, if you want to share your story with us, we can help. Check out dentistadvisors.com. Click on the yellow book free consultation button. So 2025 is around the corner. And in the summer of 2025, we have our second annual Dentist Money Summit. We're encouraging everyone to check that out. It was an amazing event last year. We expect it to be even better in 2025. DentistMoneySummit.com. It's going to be in Park City, Utah in June of next year. We'd love to have you. Jake, Rabih, as always, thanks for being here. Everyone, thanks for listening. That was our 2 cents. Have a great weekend. Bye-bye.